Good morning, everyone, and welcome to the On Time on Target Morning Brief, where we invest with fighter pilot precision on a daily basis. I think, have defeated my cough. We will see if I can make it through 30 minutes without coughing. Probably not, but I should be a lot closer than I have been in the past. Hopefully, you had a good weekend. We're facing the market this morning. It's down like almost 1%, right? So, is that a big deal? We're going to kind of talk about why it's down, and is that a big deal in the big picture? You probably know my take, but it could be a sign of things to come. And what we're going to talk about today is interest rates. So that's what the folks on CNBC are saying. The market sell-offs basically because of the creep up in interest rates on the 10-year and the 30-year primarily. Obviously, the Fed is holding the course at zero, but if the natural market takes interest rates higher, that'll be a little headwind for the market. But if that does happen to continue, is now the time to invest in banks. So you think of JP Morgan, Wells Fargo, Citigroup, Bank of America, Goldman Sachs, and basically our topic of the day is net interest margin. How do banks make money? And obviously, if interest rates go up, they can afford to make some more money. So that's what I've got for the show for today. If you're catching us on replay, make sure you hit the notification bell as well as subscribe. And if you want to join us in the morning, it's $25 a month to come on into the room. We've got a Q&A window and a chat window at your disposal to be able to ask questions. And with that, let's go ahead and get started. All right, welcome everyone. Here is our lineup card. Make sure you have your Q&A window and your chat window set up appropriately with all attendees selected in the chat window. You'll see my longs and shorts for the day trading stuff already put in there, and also in play. If you follow Elon Musk at all on Twitter, you notice he changed his picture, and he said the price of Bitcoin's too high. That's one thing he said this weekend. And another thing he said is there's a merger out there between Torch and somebody else. I can't remember exactly who, but it's there's a fork in the road. It's a metaphor, something blah blah blah. You can follow that if you want. But out of that, the stock that's in play this morning is TRCH, which actually bought a little bit of pre-market. So we shall see how that works. It's below $5 if you want to. We'll kind of circle back to that later after the markets open if you want to follow along there. But you can check it out while we're talking, and that's why I put in play over there. Standard disclaimer applies. This is a financial education presentation. You have to do your own due diligence before you act upon anything you hear in this presentation. Full disclaimer information is available at ototnow.com. All right, February 22nd, last week of February 2021 is going by kind of quick. It's again continuing to be unique like 2020 was. But again, ripping right along, and we are about a year out from kind of the big activity in the market last year, which caused all the excitement. But from riding that through, a lot of it that sounded weird, riding along with that with me. How about that? Made a lot of money off of that drop, right? So again, it's that volatility sometimes is the best opportunity to sit here and stare at it all day long and look how you can make money, right? And we did. So you don't want to, we hope that another pandemic doesn't break out or another 35% sell-off. But if the market sells off, don't sweat it. There's going to be opportunities. Right now, folks that are putting, excuse me, darn it, there was the cough, 5 minutes in. Folks that are putting new money into the market, I only have a few things that I'm buying. For the most part, it's just sitting there, kind of waiting for that sell-off. So, all right. Mission objectives, standard tactical objectives. We're going to talk about interest rates being on the rise, and you have to kind of chuckle, right? It's like, aren't they at an all-time low? Yes, they still pretty much are, but the 10-year has gone up from around 0.65 or so, all the way up to almost 1.4. That's a double. Now, small number double, gotcha, haha, right? It's like doubling your batting average. If you really suck, you just get one hit and you double your batting average. So, I mean, I got it, but the fact is that they are going up, and anytime interest rates go up, that could be a headwind for the market, and that's also one of those signals to go invest in the banks, right? So we'll talk about that a little bit. The question today is, what is net interest margin? We'll peel that back. We've talked about interest arbitrage and crypto arbitrage and those things, and it's really the same thing with just interest rates. So we'll take a look at that. Our flow will be long, short, open, short, long. We'll take a look at the markets around the world this weekend. Today's headlines, there's the bank stocks we'll take a look at. We'll get in the short-term execution and then wrap it up with the question of the day. Contingencies and academic resources are available at the website. All right, let's take a look at think pipes. With our 1 year look at the market. So yeah, here we are sitting there bouncing off of all-time highs. So even if today turns out to be a 1 to 2% day down day, no big deal in the big picture. Small picture, it's like, oh my gosh, I'm as broke as I was like 3 days ago. Yeah, none of that matters, right? So we've been kind of holding the same level. So if it sells off, it sells off. There is so much money on the sidelines now, and there's so many people out there buying the dip that I don't think the market can actually sell off to any significance without a whole bunch of money flowing in. Right, and we're still waiting on stimulus, and we're still waiting on an infrastructure bill. Taxes are something that is not even really being talked about. So all of that means we should, if we dip, it's probably not going to be that much, but we shall see. All right, let's go to the 5-day. Take a look at SPY. Show you where we are this morning. So again, here's where we left Friday night, is where this red dash bar is. So gapping down, but from where we gap down, we're actually almost trending up going into the early morning, Monday morning. So again, I think we could go either way. For shorts, I do have a setup for all three shorts across the board. Nice shorts with volume and storylines to go with them. So we'll be looking at the short side when it comes to day trading stuff. All right, let's go over to the main screen and check out where we are on the futures. That's not the right page. That's the right page. Let's refresh this. Okay, 150 points down. Rate fears. Okay, I love to make fun of headlines. Fears. The 10-year is creeping higher to almost 1.4%. Fears. I don't know. I guess I don't scare that easy. All right, so down across the board, Europe's down across the board. Asia mixed. Here's our numbers from Friday, fairly muted, kind of a boring day on Friday. I'll take boring as a money manager any day of the week. There's our 10-year up at 1.35. Fears, look at that increase, 0.005, screaming higher. That's sarcasm. All right, oil is really stabilized very nicely above 60. Gold and silver are both up, and then crypto kind of sold off, oh my gosh. Well, that's thanks Elon, who's like the master market manipulator, probably without trying to do it. I mean, I don't think he's taking advantage of it. I know that he knows when he speaks, he moves markets. I mean, brilliant guy. Obviously, he knows that. But if he's not personally benefiting from it, then is it manipulation? I would contend, yes, it is. Elon, stop talking about asset prices. But, can they nail him on it? Probably not, right? They've tried. But, Bitcoin back down below 50. I think it touched 58 or something this weekend. Don't care. The story remains the same. Go long Bitcoin until further notice. Don't know how the story ends. Don't get married to it, but at least in the short term, you can go long Bitcoin. All right, Taco Bell chicken sandwich, if you haven't missed it. Or if you haven't seen this, so the chicken sandwich wars, the Chick-fil-A, and then Popeyes came out with their chicken sandwich, which, yes, it was good. I was still team Chick-fil-A, probably due to my age, that I've, eaten Chick-fil-A so much, but it was very good. Golf clap. I didn't wait in line for it, and nor will I wait in line for a Taco Bell chicken sandwich. However, it's a taco. It doesn't have bread. It's in a tortilla. So I don't know. Better head to Nashville for the test sandwich. Oh, is that where it's coming out? But yeah, kind of crazy there for Taco Bell to. That's when companies generally get in trouble, is when you start branching off into stupid things that have nothing to do, literally, with whatever you are. I went to a car show yesterday with Allie. If you want to see a video of her driving the Maserati through a tunnel of people, it was kind of cool. That's on Facebook if you want to check that out. But after that, we went to BW3 and ate, and BW3 was featuring a fish sandwich. How stupid do you think you'd have to be to go to a BW3? Go to BW3 anyway, because it's not that great. I happen to like it, but I realize in the big picture it's not that great. But yeah, they have a fish sandwich. I'm going to buy a fish sandwich at BW3. All right, let's take a look at the headlines here. Our triple P small business loans starting to be a lot more focused. I think that's right. Jeff Immelt, the former CEO of GE, is out with a new book. Good luck, Jeff. You're yesterday's news, and if you were to release a book, the time to do that was like right when you left, right? So I don't know why. His story of redemption. All right, Jay-Z in the news with Louis Vuitton on a merger. Yes, his perception was unfair and incomplete. Yeah, write a book. You're right. Lint special. Thanks, Predator. I should have thought of that to be able to offer something. Here you go. There's a Taco Bell. Don't care about no lint. They're rolling out their chicken sandwich right in the middle of it. There you can see the picture of the tortilla wrap or gordita wrap or whatever that happens to be. Kohl's shares are on fire this morning. They're the number one long. If you were to hop in and go long in this market, you can pick some shares up of Kohl's. All right, that is about it for the headlines. So let's go ahead and take a look at bank stocks. Okay, so when you see a chart like this is JP Morgan. You know that I think that JP Morgan is the best of breed out there. If you own a bank with me, it's generally JP Morgan. You can make an argument that Bank of America is close, and it's also slightly a more attractive valuation. When you look at a chart like this, you go, oh, okay. Well, 9 months ago, it was down here at 91, it's up at 150. It would be insane to buy it here, right? Well, look at the valuation. Current P of 16, it's making money. Forward PE is 13. Pays a 2.43% dividend. So when you're looking at, the short float of 0.7, nobody betting against this thing, you're kind of like, this isn't bad. When you look at a PE, so PE of 16, and then you pull up like a Tesla, extreme example, I know, PE of 1200. Let's just pick on maybe a Disney's, even something a little more mainstream. Forward PE, not profitable right now, but when they return to profitability of 36. So it's like, really, let's pick a casino, LVS, Las Vegas Sands, 21. So still, even though the casinos have been beat up, the bank stocks, JP Morgan, still even cheaper from a PE basis. Now, you can see banks actually hang out in single digit PEs for a long time with low interest rates. And the Fed says we're going to have low interest rates, but free market's actually taken it higher. So this is a place where if I put money into, if you think a retirement portfolio, pretty safe here. There you could see some downside, but probably not. And you could see some decent upside. My second favorite is Bank of America because it's a little bit cheaper. So basically on a forward PE basis, it's down to 12. Also a 2% dividend. Nobody betting against it. A little more attractive chart because it hasn't run quite as much. Names I would not go into, Wells Fargo, just because they still have negativity out there. And on a forward basis, they're the cheapest of the bunch. And then Citigroup, I think, is completely left for dead. Wouldn't touch those folks at all. Again, forward PE of 8. So super cheap. Nobody touching them, nobody investing in them for a reason. Goldman Sachs is another name that I would steer clear of. I would just simply go with JP Morgan because they have an investment side as well. But Goldman here is actually pretty cheap. A lot of green on here, paying 1.6% on the dividend. So not really excited about it, but JP Morgan I think is the way to go. And then the last one is KBE. if you're going to buy all of the bank stocks, you can hop into, excuse me, a bank ETF. And, it's run up, basically doubled in the past year, but, holds everything, not just the big banks, but also holds the regionals like, an LC&B, which I just saw pop up in the chat there. So speaking of, let's see what that dividend at LC&B is. 4.5% there at Lebanon Citizens. So small town bank, sometimes you can get an attractive rate. And of course, the Dalai Lama is to, you've won the net interest margin game. If you happen to have a mortgage through Lebanon Citizens and also have their stock, and you're actually making more in dividend from the stock than you're paying on your mortgage. I think at that point you can say, sir, you have won the game. So maybe one of you might be doing that. All right, let's move over to Schwab real quick. And we'll take a look at these shorts. So the first short is VTRS. Viatris, I don't know what they do. Plenty of volume. They're from 18. They're gapping down to 16.23. So clearing the congestion there. They had earnings, revenues below consensus. They initiated a dividend, which shareholders probably don't like. Because again, that's just an expense. So revenue forecast is down. So that's where VTRS is. SunPower, SPWR. Again, plenty of volume from 37 down to 36. Let's see what I did see the headline, downgraded to underperform at Credit Suisse. So again, taking a downgrade there, gapping down 5%. So looking good. Then the one without a headline is this SOS Limited, 5 million shares gapping from 11 down to 10. But when you look at that, I just love this chart. So 4 days ago is when it went above 10. So it's kind of doing a hammerhead stall back into coming to the downside. So again, I like all of those shorts. If you were to take a long, I have 3 or more, 4 in the window there. You could go long Coles, again, 52 to 57 up here. Plenty of volume. And again, lots of headlines on activist involvement. And then if you want a VIX, VXX, we've been invested in this, gapping up about 3% or so this morning based on the volatility of the market. That may or may not hold, so we don't know for sure. All right, let's go over to TD Ameritrade and we'll get set up for the plays of the day. Welcome everyone to the On Time On Target play of the day. We have 20 seconds to the market open. You have 4 panes in front of you. All are 1-minute charts. We have the S&P 500 here all the way to the left, so we can keep an eye on the market. Futures are currently in the red. We have VTRS gapping down on earnings. SunPower gapping down on a downgrade, and then SOS on a continuation, a gap down. All 3 are shorts. There's the opening bell. So when you think 16, you're thinking a 15 to 20 cent stop, if you will. So we'll keep an eye on that. SunPower selling off $35. I'd say 30 cent, 35 cent stop there. And then of course, if you get in on SOS, which is backing up nicely for us. So again, I prefer these to back up and then stall out and then take them on the way back down. So it looks like all 3 are doing that. Again, about a 10 cent stop here in the SOS. Plenty of volume in all 3. Don't really have a favorite. I'd say this SOS is probably my favorite out of the group, even though we don't have a 1-for-1 headline to go with it. But based off of that chart, we have to go with at least a 15 cent stop here in SOS. We are not going to be able to cover the high of the day, but I do like it better. All right, 10.25 will be the entry to 10.45. So it's going to be a 20 cent stop. It's more than I want. But I do think this thing has the move built into it to the downside. If it continues higher, we might get a better entry. than that. Okay, if it goes to the next minute, we're going to go up to 1030 for the entry with a 20-cent stop up to 1050. Okay, it busted through that, so we're not going to, we'll have to relook at the entry there on SOS. All right, here we are. VTRS, we're at 9% down. It's already kind of hit the high of the day, 16.8. Tons of volume, millions of shares in this. Again, it was a earnings issue, guiding down. Not in love with the entry here at all. All right, not going to go in that. I'm going to kill off SunPower. Let's take a look at Coles higher, KSS higher. Is not moving higher. Let's take a look at Torch, TRCH. All right, here's where I entered. I drew this earlier. So I entered at 358. So that's where I am on the trade. And again, that was at 6 in the morning. In 6 Eastern. So I think that was 5 my time is when I entered this trade. All right. High of the day is established here at 1090 or so. Let's go. If this hits 1070, there it is, 1070 with a 20-cent stop. We'll take it up not quite above the high of the day, but up to 1090. Actually, let's go with a 25-cent stop. 1095 is our upper stop. So again, got in at 1070. You can still take it here if you want. Just adjust your math a little bit. So 20-cent stop, 25 cents, excuse me, is down at 1045, 1020, and all the way down to 995. So that is I do like our entry here. Nice and patient. We waited for that 1, 2, 3, 4 movement, 4 minutes up for it to establish the high of the day. We covered that with the 25-cent stop, and now here we are in the green on the trade. So we'll keep an eye on that. Okay, Torch, obviously it was up to 420 earlier. I do think this goes higher from where it is 360. If you want, it's more of a play. I don't know how long I'll stay in it. But yeah, you can pick up some Torch here going long if you wanted. All right, what else do we have to take a look at? Coles. I think we looked at Coles, but I don't remember it, so let's bring it back. Getting a little bit of love there, up 7.5%. VCNX. Notes on VCNX. They had a medical news thing up 8%. Doing pretty well there, all the way up to 15 now. American Airlines. So you know about the Boeing thing this weekend. With the engine coming apart, and again, it obviously, tore the fairing, basically tore itself up except for the core of the engine. So anyhow, that'll probably affect Boeing stock today, not over the long term, but yeah, 777 is going to get grounded and inspected and all that, blah, 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 standard kind of reaction. But AAL was up today, almost 6% earlier, which I think it's a little premature to get back into airlines. I do think there will be a time and place to get into the recovery stocks, but I think it's too early. And then the VXX, see what the VXX is doing, hanging around at 15.5 or so, kind of bouncing around. So nothing super notable there. All right, checking back on our trade again in at 1070. It's down at the 1R point. Again, with these trades, if you can get, like I talked earlier before we took it, about a 10-cent stop. Again, if you have a 10-cent stop, then you're almost at that R point already, right? Of that 30-cent sell-off. So that's where we had to go with the bigger stop just to cover the high of the day. I felt more comfortable with that. So anyhow, but it can mess up your math a little bit. All right, let's take a look about what's going on in the rest of the world. Empower, that's a psychedelic name if I remember right. VIX is up. Minerals, there's Delta. BNTX is the vaccine. Haven't checked on Luckin this morning. No, There it is, Luck and Early not moving 1%. Palantir up 1%, still bouncing. So there are some names in the green. See how ugly it is on the downside. There's your Bitcoin down 8.5%. Yikes. Not worried about that. That'll get bought. Some marijuana names. CRISPR Therapeutics is the best out there in the gene manipulation game. K-Web down kind of big. So a whole slew of Chinese tech names I'm sure are going to be up here. Tencent Holdings. There's Alibaba down 3%. All right. Yep. Overall, down day. Not too sweating that too much. All right, let's go back to net interest margin. I'll close out for the day. Okay, so net interest margin at its basic, most basic, excuse me, is you put your money in the bank and they take that money and they turn around and they loan it out. So they pay you, say it's 0.5%. You're probably pretty happy if you're getting 0.5%. And they turn around, they loan it to somebody at say 4% or 5% or 3% if it's a mortgage. If it's a personal signature loan, somebody starting a business, they might loan it out at like 8 or 9% for commercial stuff. People are always walking into the bank with good ideas and needing loans. Well, in this case, the bank makes money by that difference. And the difference is the net interest margin. So you willingly give them your money, and then they turn around and they make money off of your money and they keep the difference, of course. Now, just because they loan it out at 8% doesn't mean they're always going to get their money back. So they do have to price in for the fact that some loans will end up in default. Some people will not pay their loans back. That's more and more rare these days, and it goes into credit scores and why that's so important, and lending and collateral. Like, you know, in real estate, it's like, please don't pay your mortgage, right? The bank will love to have your house because houses are making money. However, back in the 2005, 6, 7 timeframe, when houses are dropping in value, there were people that had, basically walking away from mortgages, going, "Please take my house because I can't afford to continue to pay the darn thing off because the values drop so much." So it can go wrong on the bank side. You're pretty much guaranteed your interest rate, whatever they agree to pay you. But they take the risk, but then they can turn around and make money. And again, that's why if you have small town America, 10,000 people, 1 McDonald's, 7 banks, right? How do they do it? Well, they do it with net interest margin. So there you go. There's your return versus investment returns versus expenses, meaning expenses for the bank, but they pay out to you, and then divided by the total of assets. And you can go into the math example there if you want. So how does this affect you? And I talked about this the other day, but basically 3.5% in your life, if you have a mortgage and it's below 3.5%, don't pay it off early, right? Because your money can do better elsewhere, right? If it's above 3.5%, then kill that debt off, because that's bad debt in your life. You don't need to be paying it. Just go ahead and stroke a check for it. You don't need to have money sitting in the bank where they're paying you a little bit and the bank's making 4%, and you turn around, you've got a 4% car note. So nobody likes to pay off a big car loan by stroking a check, but you need to adult up and do it. Just pay it off. Done. Get rid of it. Again, if it's less than 3.5%, you can keep it forever. Basically, if people are going to just continue to give you money at 3.5%, then take it and then earn more than that. So anyhow, that's what's going on there. If you have 50,000 in the bank, and they're paying you some small percent. But if they're turning around and loaning that out and making 4%, which you could in a basic bond fund, that's $2,000 a year. So when you think on a monthly basis, they're actually making, what's that, $160 a month off of your money. That's pretty good on their side, right? If you had to turn around and write a check for the privilege of, if you had to pay them $160 a month, which what you're in effect doing with your opportunity cost of that money, you would not do that for more than one. You would do that once, and then you'd take your money out of the bank, right? So, and again, you can do that on your own. Keep your 20K or 25K of dry powder. But other than that, get that money into a brokerage account and get it working for you, and you'll be happy you did. So, all right, that's all I've got for you today. Voice almost held out, not nearly as much coughing. So I know that's been painful. Thanks for hanging with me. And with that, you guys enjoy your week. We'll talk to you soon.